Let's get to the sections of business insurance. There's quite a number of them, but in the interest of time, we will cluster them into groups. Let's start with the fire building combined, office content and glass sections. What can policyholders cover under these sections?
If we take the fire section, it's normally used as the word fire, but it covers natural disasters. So you cover your assets for flood damages, you cover your assets for damages caused by fire. So you can cover your buildings, you can cover your fixtures and fittings, your machinery under those assets, things like your brand labels. The difference between building combined and fire section is that the building combined, it normally extends to cover even theft on the building itself. So it's quite extensive. It's used normally by people who, let's say you own a crèche and you've got buildings and you've got outside things that goes with part of that business.
Yes.
Goods in the open. So you're able to take what we call building combines, because then you're combining the building itself and the things that goes with that type of business. Office content is very simple. The office furniture, the fixtures that you have, the things you have in your office, your refrigerators that you use in your office. And the glass section, it talks to signage. So we know in a business, signage is important for marketing, but can be very expensive. So you can cover it, it's exposed outside, and you've got signage internally, and you can also cover your glass partitions. Yeah.
And take us through the electronic equipment, business, all risk and money sections.
When we talk electronic equipment, we're talking about any data processing electronic equipment. So your normal TV that you watch at home or you use for screen for staff can be insured under office content. But the minute you have something that is processing data, like your PC, your laptops that you're using that's got software, then those you insure under electronic equipment. Business all risk. Let me go back a little bit to electronic equipment. They differ. You've got the ones that you keep in the office. They're called non-portable. But you also have the ones that you but if they are in the business risk address that you've insured. Then we have what we call business all risk. They are covered wherever they are. They've got a worldwide cover. So if they get stolen in a mall or things like that, you know you are covered. Money section, and all it does is businesses operate and they take a lot of money. You need to cover your money. There's always rules to insurance. You know, if you are taking money, they will tell you the minimum that you can keep in the till, of course, as a risk mitigating factor. And they will also require different types of safes that you can keep money. It's better to bank every day if you're dealing with money, because you are then dealing with the risk that you would be exposed to as a business. But if you do get a robbery and you had money in the safe and in the tills and you've appropriately covered it, it will be paid.
Yeah. I think we're going to come back to some of these sections later, but for now, I want us to now move to the accidental damage, machinery breakdown, and deterioration of stock sections. Which items are covered under these sections?
Okay. Accidental damage is a type of cover that covers a specific risk. So you'd find you can accidentally take accidental cover. Machinery breakdown, we've got industries that work with heavy equipment and heavy machinery. So you're reliant on your machinery. Let's take the radio station. It's reliant on certain equipment for it to be functional. Provided you service that equipment on a regular basis, if it does break down, it means loss of income. So it may require you to have a lot of income to fix it. But if you've taken cover for machinery breakdown, it will be repaired on your behalf. People who have got stock that is perishable, sometimes it does happen that the recent things, the power surges, you've got stock in your fridge and it goes off. When it deteriorates, when you do have a deterioration of stock, you can claim for that stock. We see it a lot with the food industry. It does happen, and they do take this cover, and it helps them quite a lot.
We're going to come back to that and also just give examples, of what type of cases qualify for cover under these circumstances. But for now, the other section to consider, and I think so many businesses that had this cover and were affected by last year's looting spree were so relieved that they did, is the business interruption section. Tell us about this section.
Business interruption section is one of those very important sections, in the sense that business is in business to make profit. Now, when your business is not operating, you are not making money. That's the reality. So what it does cover you is, in the event that your business has been materially affected, so it burned down, you then lose your revenue, but you still have debts that you need to cover, and you're losing profit. Then that's where the business interruption cover comes in. You've got different types of cover that you can take. You can cover the profit itself. Obviously, they look at the cost you didn't incur, and then they will pay the profit less the variable cost you didn't incur. You can cover standing charges. So there are certain businesses that says, look, if I don't operate, I still have to pay my employees, I still have to pay my rent, I still have to pay rates. So you can cover those standing charges, and you are able to bridge, by the time the insurance fix your building, at least you have been able to deal with the debts that you have during that period. So we've seen, as you say, during the riots, a lot of businesses that went out of business for a very long time, whilst waiting for the insurance to fix their properties, were able to at least earn some form of income to sustain themselves. And obviously, a businessman has to earn some salary. You rely on the business interruption to help you with that.
True. There's also the account receivable section. What does this section cover? And sorry, Ms. Shumang, I think we are going to go just a minute before the advert. So we will continue with it, with this question after the show. Please do stay with us. We are in conversation with Ms. Mosidi Shumang from the South African Insurance Association. Stay with us. in cash. Please note that there is no limit on the number of votes that you can make. All votes will go into a draw where one lucky winner will win 40,000 rands cash prize. To vote for UFM, simply visit radioawards.co.za. Bring it home. Vote for UFM. In tune with you. We continue our conversation with Ms. Mosidi Shumang from the South African Insurance Association. Ms. Shumang, before the break, I did ask you to briefly tell us about the account receivable section under the business insurance policy.
Thanks for that. Accounts receivable, it's basically in the event that your accounts receivable are damaged. Let's say your computer software where you keep people who owe you, it's damaged to a point of you can't recover. So you don't know who owes you and how you're going to recover your monies because your records
And a lot of businesses own vehicles, Ms. Shumang. Let's look at the motor and goods in transit sections.
Motor sections of the business, you can insure your vehicle, like you can insure it for comprehensive cover, which is if it's involved in an accident, obviously it gets damaged, so we call it own damage, or you can crash into somebody else's vehicles. In that case, the business becomes liable to fix the other person's vehicle. Then if you have comprehensive cover, the insurance will cover the business vehicle and also the third party cover. Comprehensive does extend to theft if your business vehicle is stolen, so it will be paid. Obviously, motor section covers the vehicle at retail value. However, we do understand sometimes businesses would want to cut costs, so they will say, look, I have older vehicles, I would rather only cover the vehicle if I bump into somebody else's vehicle or if my vehicle is lost. So you can cover third party only, or you can cover third party fire and loss. So you say, I will cover myself if my car is burned or it's lost or I bump into somebody, but if it's in an accident, I'll fix it myself. So that depends on the person's budget. Goods in transit is that cover of, you do have businesses that trade in goods, or you buy your own material, your stock, raw material. When your vehicle is in an accident and it was carrying your goods, obviously they get damaged. And goods in transit will then pay for the material you might have been carrying. There are specific businesses that deal in transporting goods, third-party goods, customer goods. So those are the type of businesses who would seriously consider goods in transit section, because you are saying whilst they're being transported, if they get stolen or they are damaged in an accident or fire, then I need them to be paid by the insurance. Yeah.
Let's talk now about, and I think a lot of businesses are exposed to this risk, theft and fidelity guarantee sections and some of the conditions that accompany these covers.
Okay. Theft section, theft is a reality. So for insurance to cover you for theft on your premises, there has to be what we call forcible and violent stranger that is covered. However, fidelity guarantee, it's theft by employees of the staff. So we do find employees stealing from their businesses. You know, it happens all the time. However, the insurance will then expect the employer to open a case, and you can't remove that case. So you have to open a case with the SAPS and proceed with that case, and then they will only honor the theft. Or it goes on to dishonesty acts. You know, they can steal a laptop in the office. You have to still prove that it is the employee who stole it. So fidelity helps you a lot. businesses that take third-party monies, your real estate that takes deposits, your lawyers that deal with funds, it is important to have this type of cover, because employees can take money that is in the trust account.
Let's look at liability covers. Talk to us first about the public liability section.
Okay. Liability is a type of insurance where you are being sued whilst conducting your business. So it can come from various different sections. There are various number of liability policies. The public's liability, simple one. Any member of public, I come into your studio, I trip and I fall down the stairs and I become injured. And then I bring a case against your company to say, because of your negligence, there was a wire and now I've damaged, I'm injured and I sue you. So there has to be a party who sues the organization or who makes a formal demand against the organization. A lot of what we find is construction companies or people that work where the bodily injury and things like that. So for an example, if I operate a dry clean and I don't give my employees enough safety equipment, over time the employee develops asthma and he can relate that asthma to the work. And he starts suing the company to say, it's because of you that I'm now unable to work and I'm going to sue you. Then employer's liability will then defend you against that type of action that is taken against the business.
There's also the stated benefits section. What does this section cover?
Normally, and I need to clarify, the stated benefit is you can take accidental bodily injury or death for your employee, the cover. Let's say I've got temporary employees that come in and go, and they are, let's say, a signage company that they have to climb to put up signs and things like that. So in the event they get injured accidentally, I need to cover them. So it's very important that I have this cover because of the nature of the work that my employees are exposed to, or they are always on the road. So the chances of them being injured or have a fatality on the road is quite important. What is important is that this is only on accidental injury or death. Your normal natural death have to be covered separately under the Long-Term Act, so they don't get covered in this type of insurance where we're covering assets. Yeah.
All right, we are in conversation with Ms. Mosidi Shumang from the South African Insurance Association, but we have to leave it here for now. Karaba Mokhalakadi has to come through with sports. Dimakato Khenkwe has to come through with the news for 8 o'clock, but we do continue the conversation on our social media platforms, Facebook, Twitter, and on YouTube as well. So please do join us there so that we can continue our conversation with Ms. Mosidi Shumang from the South African Insurance Association. We are talking everything business insurance. It's 8 o'clock. It's time for the news.